Today we will discuss the accountancy chapter, that is bank reconciliation statement. See, this is a very important chapter from the point of view of examinations also. Institute of Chartered Accountancy put this chapter into the CPT also. Now foundation course introduced by them, they also put this chapter in this chapter. If you go for the past previous examinations papers, this chapter basically some average marking scheme of 10 marks of each year. They are asking the question. Sometimes they are asking fully practical questions, sometimes they are asking for practical and multiple choice questions also. It is on them, but average the weightage of this chapter is 10 marks. Now that comes into the mind, why it is bank reconciliation statement. So as the name suggests that it is a statement, it is not an account. So there is no question of being debit and credit in this chapter. So there is no, if someone is saying that I am not good in accountancy, okay, this chapter is not bother you so much, because it is not an estate, it is not an account, so you are not supposed to put the rules and regulations of debit and credit. Again, simple, I will tell you in simple calculation plus minus theory also, we will do complete this chapter. So it is a statement, it is a bank reconciliation statement. So if you are thinking that what is bank, you know that bank is an organization or institution. Reconciliation is basic means to make up, to go to match the consent, to take the consent, to match that, and a statement is prepared that for the purpose of why there is a difference between the bank's issued passbook or bank statement or cash book prepared by the merchant. Remember that when the organization started, they opened the account, then that time they deposit, for example, 10 rupees, and bank says that 100 rupees is also deposited to them. Means 100 rupees is deposited by the merchant, and bank said, yeah, you deposit 100 rupees. So at the initial point of time, the balance should be equal. It might say they are having, says that it is having a debit balance, they are saying it is having credit balance. So, but the amount should be unequal. It is earned from the opposite side. For example, I am giving you a loan of 100 rupees. For me, it is an asset. For you, it is a liability. But always the amount is same. So the amount of the starting of the bank transaction is equal. So why at any point of time there must be equal amount deposited by them and as per confirmation by the bank, but in general it is not possible. Even if you check your bank statement, if you check your personal saving account, you think that I am having 1000 rupees in my bank account, but when you go to the ATM, sometime it will not 926, 1010. There is why it must be 100,000. Why there is a difference? And it is not an error. Remember that it is not an error that you are thinking that is 1000 and you check that it is 20 and due to error it is this or this. It is something that it is not maintained by either one side or second side. So that time when we are thinking about that is the need of the bank reconciliation statement. Remember one thing, bank reconciliation, by preparing bank reconciliation statement, generally there is not changing into the bank account or bank statement, or generally there is no changes into the cash book of the organization also. But the purpose is that comes into the mind that why we are preparing. I am giving an example. Sometimes your parents give you 100 rupees and told them to go to the village shop, or go to the shop and to purchase some vegetables. That time you go there and purchase some vegetables. At the end of that, after purchasing the vegetables, you come to the house and your parents ask how much amount you spend that. You are thinking that you spend this much, and you spend that 90 rupees you spended that. When you search in your pocket, only 5 rupees coin is there. Now you are thinking that how possible I spended 90 and 5 is there. Where the 5 rupees gone? You are not doing error in anything. You are doing whatever you have spent. You are telling each and everything. Then why? Then you are thinking. Then it comes and okay, there is one beggar who asked for some amount. I paid them. By knowing that, by recalling this amount, you are not having 10 rupees now. Still you are having 5 rupees, but now you are having a thinking, yes, my account is okay. I have 100 rupees, and now as per me, the 100 rupees is the expended, 95 rupees in expenditure and 5 rupees in cash in hand. So by thinking that, you are not changing the balance, neither the balance of the expenses, neither balance of the your balance in your pocket, but this gives you the reconciliation. Yes, the amount expended, the amount received, and the amount received from the parents is equal. So that is the some another example is there when so many times you are playing the cricket tournaments of your home state or your home villages. There are two persons are there, a scorer. One team says that this runs are 100. Second is says that 19 runs is there. Where is the 10 runs goes? They are like okay, check first batsman 20 runs, second batsman 10 runs, and they match one by one, and there is one 6 is there and one 4 is there. It is not written into one book. It is not. Thus, it means that there may be an error, there may be a mistake, there may be omission, there may be partly omission. So many reasons are there. There is no thinking that there is only one reason, and due to difference for the purpose or difference of that. So remember that bank reconciliation statement is in practical, is in general life also. There is a very important chapter. So in books, so many types of so many methodologies are given to you for the purpose of doing bank reconciliation statement. But I will tell you that very easiest topic. We will after understanding this method, we will discuss the method from the book, your study materials, whatever the. Because in chartered accountancy, basically you are supposed to follow the methodology what is given into the study material of that. So remember that bank reconciliation statement basic format is this much. It is a format where it is a particulars, and here it is an amount, here is an amount. Never write debit or credit, and the title of this is BRS of so and so. It is must be as on so and so. So because it is on a specific date, and as you before this is a format. How we will write, we will discuss about after that. Now I am telling you that there is two steps, because if you want to reconcile something, there must be two things in your head. I can't say that I am good. I can't say I am better. If I am trying to say I am better, I am supposed to say I am better than someone. So there must be two options available for the purpose of bank reconciliation, and two balances is that your balances of passbook and balance of cash book. Cash book you studied. If you are not studied cash book yet, so cash book is basically bank column of cash, two column cash book, or generally it is a bank account, ledger of the bank account. Whatever, we are not supposed to here give you the indulge into the point of what is cash book and how cash book should be prepared. We will discuss it later. So it is the two statement, you can say one account, one statement. So balance of passbook or balance of cash book. Now balance of passbook may be two type, debit and credit. Debit and credit balance. Cash book also may have two balances. So if balance of passbook is debit, balance of passbook may credit, balance of cash book. So we have to reconcile either by this. For example, your passbook says you are having debit balance of 500 and your cash book says you are having credit balance of 1000. You have to suppose reconcile. So each one, anyone from this or any from this should be matched for the purpose, and that is the reason behind the reconciliation of bank reconciliation statement. Remember one thing, in general cases, bank statement will show you the debit balance. What is debit balance? Means you are having deposit into your account. If you are going for the OD limit CC account, it may be the credit balance also. So in your topic of discussion, your syllabus, it is known as bank passbooks. Debit balance is also known as favorable balance. Passbook credit balance is known as unfavorable balance, or known as overdraft also. And this cash book debit balance is known as favorable. Sorry, I am wrong here. For passbook credit balance is, you can say that favorable balance, and passbook debit balance is unfavorable balance. Cash book debit balance is favorable balance, or cash book credit balance is unfavorable balance or overdraft balance. So what is favorable, what is unfavorable? If bank will say that a bank is having liability of paying you 1000 rupees, it means you deposited that for, so bank shows credit balance, that is favorable for you. So many times you deposit into some amount into your bank, you will get an SMS that your account has been credited for rupees so and so. What it means? Your amount has been increased. So, and if you withdraw some amount, that you got an SMS, your account has been debited for that. So passbook debit balance is something else, passbook credit balance is something else. Passbook credit balance says that your amount has deposited into the account. So these four things are maybe the base of your bank reconciliation statement. So we will discuss these things later also. So I am just giving demonstration, I am just telling you how the bank reconciliation statement is prepared. So this is the format. I already told how it is bank reconciliation statement of the name of that organization and date on which you are preparing. Particulars, amount and amount. Here whatever you are supposed to take as a base. For example, I am taking as a base balance as per cash book. So you check your balance as cash book and write down. For example, it is 3000 and now add less, and then the resultant will be what? If you are taking the balance as per passbook, the resultant it will balance as per cash book. So that will be your answer. So remember that this is the unique chapter into the course of a study that you are having sometimes your answer into the books. In 11th also you said that both the options are given. If you have to take this as a base, you are supposed to get it an answer. If you take this as a base, you are supposed to get this as answer. So sometimes if the both options are given into the exam, I always suggest to the students of class 11 and 12 of CA that if the both options are given into the examination, just solve it at last, because if you are not getting it at first chance, you will do to expend too much time for the purpose of getting the right answer. So this is the basic format of the bank reconciliation statement. I am giving you one example that, for example, if you find after checking the both statement, you find that one interest is given by the bank or you are not recording that interest. We will discuss that what are the reason behind the difference between these. So if, for example, the bank given you the interest and it is the bank passbook, so while giving that, passbook should be already increased. So this 3000 already added by the bank that 100 rupees interest. So you want to know the actual balance of the cash book. So cash book is already saying what amount? 2900, because they are not knowing about that. So what is this? This may be balance amount credited by bank, not given by the. So already we will supposed to subtract that. So by doing this, what we are having? We already had 2900. We have 3000. We are not changing this. So by going through these both statement, we find that there is 100 rupees interest which is not recorded into the cash book because they are not knowing that banks given the interest. So by thinking that how we will do that? So if we are taking base as a passbook, we are subtracting this 100. Now we are getting this. Now think that we are having a base of rupees. Cash book is the base. So cash book is 2900. So balance as per cash book is 2900 and bank given that interest to you. So it means that due to that your bank passbook is already increased, cash book is not increased. So by doing that, you are supposed to increase the cash book to equalize both of balances. So we'll add interest issue allowed by the bank, not given. So we are supposed to. So see, both the 3000 is there. So this is just I am giving an example of that. So many things are there here. Some if there is a overdraft balance, how we will treat that. It is not a so very tough topic. It is a very easy topic. We will discuss after whenever we are discussing about this topic. So remember that at the end of the demonstration topic. Remember that bank reconciliation statement is a statement which is prepared for the purpose of knowing the reason behind the difference of the balance as per cash book and balance as per passbook. And by preparing that, sometimes it is a methodology that by altering the cash book, because we can't alter or change the passbook. So we are having an option. If you are not prepared, you didn't prepare the trial balance before preparing the trial balance, you are making bank reconciliation statement. There is a methodology that you can change your cash book by entering those entries which are not entered till date. So that is also a topic of discussion. It will take 4 to 5 classes to complete the chapter, and as you also know, practice makes a man perfect. So whatever, how much practice you will do that, you will get basic condition and a good marks. Thank you. God bless you. Take care.